I bet that you would agree with me that realtors work really hard for their commissions. So why are you giving more than you need to in taxes? Most agents don't realize that they are overpaying the IRS every single year because they are not leveraging all the deductions that are available to them. In this video, I will break down the most important tax deductions that every real estate agent needs to know, plus a few game-changing tax strategies to help you keep more of your hard-earned money. I have a background in accounting and have been in this industry for 20 plus years, so I know exactly where agents make mistakes and where they leave money on the table. Hey, I'm Christina Gentry, real estate coach, team leader, and founder of OmniX. I help agents scale smarter, attract better clients, and build a profitable business without burnout. The one thing that most agents overlook is their tax strategy. And I get it. Taxes are complicated, but not knowing this stuff could be costing you thousands of dollars every year. So grab a pen, take some notes, because this video is going to save you money. Let's jump in. Before we get into deductions, I want to call out the biggest mistake that real estate agents make when it comes to taxes. They don't track their expenses. Your accountant or your CPA is not going to magically find tax savings for you if you don't track it. You cannot deduct it. So the solution is you need a system. And if you've been watching my videos, you probably know I was going to say that. You need a system. The apps that I use are QuickBooks and MileIQ for tracking. Use whatever works for you. Be sure that you keep your receipts organized in QuickBooks, in a Google folder, in something, an app like Expensify. I don't care, but keep those and keep them all together. Set a calendar reminder for once a month to categorize your expenses so that you're not scrambling at tax time. And side note to this, you should know what your monthly expenses are anyway. All right, moving on. Here are 10 must-know tax deductions for realtors. Let's break down the most important tax deductions that most agents that I talk to are not taking full advantage of. First is going to be your mileage and your vehicle expenses. Real estate agents drive a lot, and you can deduct your mileage for all those properties that you go look at, your listing appointments, driving to closings, and other business-related errands that you're doing. So there are two ways to do this. There is either a mileage deduction, which is the standard from the IRS. This does change every year, so you can always go to their website and see what it currently is, or you can deduct your actual vehicle expenses, like your gas, your maintenance, your insurance, payments, etc. Pro tip on this, I mentioned it before, but you can use something like MileIQ to automatically track your drives and categorize them. It makes it really simple, really easy, and the IRS does care if it was a personal drive or if it was business and where you were going, so you do have to keep track of that. Now, let's say that you drive half of the year for personal and half for business. That means half of your miles or half of your expenses are going to be written off that year. Keep track. Number two would be the home office deduction. If you have a dedicated space in your home used exclusively for business, you can write off part of your rent or your mortgage. There are a couple options with this. Option one is the standard deduction. At the time of this recording, it is $5 per square foot with a max of 300 square foot, which would equal $1,500. And option two is your actual expenses. This is where you deduct a percentage of your home expenses based on your office size. Now, this can include things like your rent or your mortgage, your utilities, Wi-Fi, and even home repairs related to the office. Number three, marketing and advertising costs. Every dollar that you spend on marketing is a business expense. So this can include things like social media ads, your website hosting, business cards, flyers, mailers, videography, photography, and really anything else that you are spending on marketing. If you're investing in marketing to grow your business, you should be writing it off. Number 4 are coaching courses and trainings. If you pay for real estate coaching, something like OmniX, sales or negotiation training, business growth courses, these are 100% deductible. Investing in yourself is investing in your own business. Number 5, office supplies and technology. Things like your laptop, tablet, phone, printers, ink, office furniture, your CRM software, and your productivity tools. Even your Zoom subscription is deductible. Make sure you keep track of these things. Number 6, meals and entertainment. Did you know that business meals are 50% deductible if you take a client to lunch, meet with another agent for referrals, network with lenders, inspectors, or brokers, keep receipts, and note who you met with and what was discussed? Only real business meals are deductible. Number 7, professional fees and licenses. You can deduct fees for your real estate license renewal, your MLS and association dues, your brokerage desk fees, and if you pay it, your E&O insurance. Number 8, health insurance for self-employed agents. If you are a 1099 independent contractor, you can deduct health insurance premiums for yourself, your spouse, and your dependents. Number 9, retirement contributions. Most agents don't even think about retirement, but if you contribute to a solo 401k or a SEP IRA, you can lower your taxable income significantly. Number 10, depreciation on business equipment. Large business purchases like your laptop, your camera, or even office furniture can be deducted all at once or depreciated over time with either Section 179 or useful life. Let's talk about bonus tax saving strategies, and I hope that you're still with me. Here are 2 next level tax strategies that could save you even more money. Now, please talk to an accountant or a CPA to see which is best for you, but I want to expose you to these options because it is really, really important. So you can set up an LLC or an S Corp. This is going to reduce your self-employment tax, and it allows you to pay yourself in a tax efficient way. You can also hire your kids or your family members. You can pay your kids up to $14,000 tax-free for helping with business-related tasks like social media, admin work, etc. That's money that stays in your household instead of going to the IRS. This was, again, just a kind of brief overview of these things. I hope that this really helped you and that if you are missing any of these, you get on it and you put these things into practice right now. Real estate taxes do not have to be overwhelming, but if you're not tracking expenses and using deductions, you are paying way too much. Here's what to do next. Download my free Realtor tax deduction checklist. The link is below. And be sure to talk to a CPA who specializes in real estate. Not all accountants understand 1099 agents. Start tracking your expenses today using something like QuickBooks. Let me know in the comments, what is one tax deduction that you have been missing out on? I would love to hear from you. And if you want more business growth strategies for real estate, make sure to subscribe and turn on your notifications. I'll see you in the next video.